to the AMC Cage. Welcome to the AMC. Yeah. Welcome to the plane. Grab a chair, one share, one ray. You are now locked in with security jam. Watch his golf floors, lies, and fake ass pages. One eye on the cams, one eye on the game. Bad badge on his chest, but the grin ain't tame. Calm on the outside, storm in the frame. Deep in the skull, something shakes them bars. Joker 8 waking up, laughing hard in the dark. Protector of the cage, guardian of the skull. When the bullshit gets thick, he starts losing control. Security James keeps the show on track, but Joker 8 hears last and starts clawing back. This ain't your soft little market recap. This is facts with teeth in a baseball bat. Welcome to the place where the fraud gets named and the fake tough clowns get dragged through flames. Security come, Joker 8 insane. Same damn body, two sides of pain. One asks questions, one breaks chains. One checks numbers, one screams names. Welcome to the AMC Cage, where the memes grow teeth and that charts feel strange. We don't bow, we don't break, we engage. Security James with Joker 8 off the chain. Welcome to the family inside this frame, where the market tricks get dragged by name. We break down moves, we step out the haze. Welcome to the AMC Cage. Lights buzz, screens glow, coffee gone cold. Every candle on that chart got a dirty little soul. Gap up, gap down, head fake trap. Same old bullshit in a brand new head. They paint fear red, they hide it in spreads. They smile on TV while that basement bleeds red. Volume talks dirty, candles leave clues, and we don't chase noise, we interrogate moves. Chaotic queen with the nose to the stare. Cross-exam queen with the smoke in the air. Silver in the notebook, steel in that glare. Your weak logic right out of that chair. Crazy angry Matt in the back, arms crossed.
Show me the math or shut the hell up, boss.
Always got fat, always got smoke. Always 1 second from calling out a Joe. James holds steady, back to his vest, but Joker 8 coin holds through his chest. One keeps peace when the floor gets loud. One says fuck that,
Drag him out now.
two versus one mission, one damn goal. Expose the game and protect the soul. One walks the wall, one bites through the rule. One stays calm, one gets cruel.
We see the games they play, numbers trapped in a crooked cage. Facts got teeth in this place, and we bite down hard on every fake. They can dress it up clean, call it market design, but bullshit still stinks when it crosses the line. We don't need hopium, we don't need praise. We need receipts, timestamps, filings, and names.
Wow, welcome to the AMC Cage, where the memes grow teeth and the charts feel strange. We don't bow, we don't break, we engage. Security James with Joker 8 off the chain. Welcome to the family inside this frame, where the market tricks get dragged by name. We break down moves, we step out the haze.
Welcome to the AMC Cage. This ain't a circus, this is study hall in hell. Every laugh got a purpose, every joke rings bells. Every dumbass headline, every crooked little spin gets thrown on the board, and we dig right in.
No fake preacher talk, no trust me bro. No shiny little puppet with a Wall Street glow. If the numbers don't match, then the mask comes off, and Joker 8 laughs while the room gets soft. James at the can with the plan in his hand. Joker 8 in the shadows like say it again. Quinn got the math, Matt got the math, and the whole damn cage got a memory like rap. Scared of the truth, don't step in his ring. If you're ready to learn, pull a chair, let it sting. We don't chase clout, we don't kiss the tape. We watch every move and expose the fake. Welcome to the AMC Cage, where the memes grow teeth and the charts feel strange. We don't bow, we don't break, we engage. Security James with Joker 8 off the chain. Welcome to the family inside this frame, where the market tricks get dragged by name. We break down moves, we step out the haze.
Welcome to the AMC Cage. Doors locked, intro done, showtime, throttle spun. James on the mic, you know the one. Rule question everything, trust none.
Watch the spread, watch the tape, watch the clowns, watch the fade. Joker 8 laughing, James is fade.
Now teach these motherfuckers how to spot the bait.
Welcome to the cage, Joker 8 but the chain. Security James on stage.
Welcome to the AMC Cage.
Welcome to the AMC Ape Cage.
Good morning, y'all. All I know is that X is trying to fuck with me today. Let me tell you something. Not only have I tried 4 different spaces, like, to try and start them, I have literally, and I got messages galore that just says, it says unavailable. It says unavailable. It says unavailable. I'm like, what the fuck is going on? Like, why am I doing this? So, because I have to have the premium account and I can't justify just paying for premium. So I do the premium plus. So this way I can stream. I don't have any issues whatsoever. So I go to the little support page down there and it says, oh, you might be suspended. I'm like, what? For what? What did I do? Did I piss somebody off? Did I tell the truth? I probably told the truth. That's probably the problem, is that I actually, didn't lie and give you guys fluff. Oh, that's fine. Whatever. They can all go kick rocks for all I care. But that is the biggest load of horseshit, and you better believe I'm going to be blowing somebody's ass up, whoever I get to talk to on customer service. But good morning. We have a soon-to-be epic earnings, which is great. The one thing that's great about it specifically, and I put out an article for all of you, something that to kind of follow. From what I have been tracking, one of the things that I've been like steady, and you guys that know me, you know that I have no qualms with bitching about NVIDIA in any way, shape, or form. I think they are the next Enron. I think they're just an absolute clown show beyond clown show. But the one thing that I have noticed is that if you look at NVIDIA's price and you compare it to, if you compare it to AMC, this Friday, this past Friday and Thursday were perfect examples of this, where the opposite happened. So the price started going down on NVIDIA, and because it went down, you saw AMC start to go up. Well, just a thought, and just some of the things that like I noticed specifically when I was going ahead and actually looking at this is that I really think that they are using the loanable shares from NVIDIA as the collateral to short on, they're able to short AMC and actually be able to hold whatever they need to hold, that's exactly what I think. Yes, actually the songs are on iTunes. That's actually one of the things I did want to actually announce today, starting actually tomorrow, I believe, either today or tomorrow. But you will have all of my music that's actually going to be starting to transfer over to iTunes or Amazon or all that. So, yeah, congratulations to me. Yay! But yeah, it's on Amazon, it's on Spotify, it's on YouTube, Facebook, TikTok. I'm going to be actually putting the videos also that is associated with the music. So this way you guys can still watch those videos if you want to. That's completely up to you. But yeah, it's all going to be on there for you guys. So you're my inspiration for doing that. So yeah, I figure it's only fair that you guys be able to see it everywhere you need to. So enjoy. It's also on the website also. So if you guys do want to just go and watch this way you can also chat with me and respond. It's AMC Ape Cage live.live, and it's playing right now. You can watch the live feed right on the website. You can also check with all the evidence desks. There's a specific tab that you go ahead and you click on. You can see all the evidence for everything that I'm researching, so that this way you guys are able to go ahead and look at that and just see where I'm at within the research portion of it. And also, if there's anything that you guys have or need, there's this, my email is up there. You guys can email me. You could DM me, whatever you guys do find. And I'll go ahead and I'll search it through it and put it through the data miner and see what we come up with. So that's the most important thing, is that way we're staying on top of what we need to stay on top of. That's the most important. So I'm excited about earnings though. So here's the scenario. And most importantly, I'm going to go into that. Let me just get the AMC Entertainment Company earnings. Wish I could actually like watch it. Can I stream it? No. Yeah. Webcast. AMC 8 cage. And register. Yeah, I think you're trying to shut me out. Go fucking have fun with that sandpaper dildo. Anywho, so like I was saying before, if you looked at the article, that's one thing that I'm going to go over that real quick. But here it is. Because there's just some specifics that are that I'm looking for, and I think that you guys should also. This is something that you guys should also be exploring, looking into, because it's something. It's very interesting how they can actually go ahead and put that collateral towards that, and how fast that this thing totally reverses if they have a boo-boo. So that's the funniest part. I like the boo-boo part. Oh, a little boo-boo. But let's move you. Or move you over that side. Here we go. So, it is. All right. BlackRock could be a major source of lendable AMC and GME shares, while JP Morgan and Goldman Sachs act as the intermediary and the hedge fund supplies collateral. But that is different from BlackRock using its enormous NVIDIA holdings as collateral for somebody else's short position. The plausible chain in all this, and I'm going to post this up in X because I don't think I can put it all in the, no, I can't. I'm going to put this up on X as a post just so all you guys can check this out. This is the exact chain for what I just posted. So go to that and you can see what I posted, and that will give you the answer that you need. All right, just periodically looking at that, make sure we don't miss earnings. BlackRock confirms that its funds lend securities to financial institutions receiving collateral worth more than the loan security, and that borrowers may use the shares to facilitate short sales. The positions are marked to market, and additional collateral can be required when the loan stock appreciates. So BlackRock's aggregate, if they have right now 35.88 million GME shares, they have 40.16 AMC shares. So what does that mean? So the stock loan, JP Morgan, Goldman, or another approved borrower posts to the BlackRock fund, then frequently around 102% or more of the U.S. share value marked daily. The short sale margin is the hedge funds post to its prime broker. Then you have Reg T, FINRA minimums, and negotiated portfolio house margin, frequently substantially higher for volatile concentrated positions. The AMC margin portion of it, so the short market liability is $1.48 million. Regulation T, the initial benchmark is 150% is the total collateral call that they'll actually have to have because it's at the price where it is. Now, if it gets above $2.50, which is exactly what we want. So they're predicting right now, according to some reports that I've seen, is that we could have as high as a 30% jump today. If it were to go into that 30% jump, and let me get to that part real fast, just so you guys understand. I don't know why it's switched, the unmuted, but that's okay. Very interesting. Where is it? There we go. It proves one part of the theory. The market is independently pricing an unusually large AMC earning reaction. It doesn't prove or disprove my NVIDIA collateral mechanism. A 30% option implied move means traders are pricing substantial volatility in either direction. The CBOE explains that the option pricing generally estimates the magnitude. The independently confirms that the option market expects an extraordinary AMC move around earnings. It does not prove the collateral theory, but it establishes the volatility event required to test it. The next evidence would be the direction and timing. AMC rising sharply, GME reacting sympathetically, and then a NVIDIA or an other eligible mega cap collateral weakening at the same time without broader sector explanation. So the best way to kind of make the parallel is think of this headline as confirmation that the fuse is present. It's not proof of who's connected it or what happens when it burns, but the idea is there amongst traders. So if we go ahead and we have that opposite move, so for NVIDIA, that means they have to post more margin. That means they have to post more collateral. That means that if AMC gets above 250%, that means, or $2.50, that means the move that you're about to make is probably going to keep on going, and the volatility is probably going to increase more and more. So today could be a wild day. Am I saying MOAS? No, I'm not. But it could be a wild day. And that's the most important part of this, is just the wildness of the day. And if we have people that are playing options, this is a nice time to set that up, if you know what I'm talking about. So that's the wonderful thing. But the next part of this is just the earnings itself. And so the report did come out that we are about to have the greatest earnings that we've ever had, which is excellent. I mean, I like hearing that. That's something that I was wondering what Adam Aaron was doing kind of like yesterday, like hinting at some things, but not hinting at some things. And I got, I'm like, just, shh. Yeah, all I want to hear right now is just, don't give away the house. Let it be a shock. Because the minute that they shock them, oh my God, I mean, it's crazy at that point. So, AMC Entertainment Holdings, Inc. records second quarter 2026 results, delivering the highest quarterly revenue and adjusted EBITDA in its 106-year history, folks. Here's the other good news. Now, I'm hoping that we hear about the completion of the Goldman Sachs deal. We are going to hear about the Ross deal being completely done. So that means that we have a total off of those two deals would be about $350 million that we've made off of those for just the dilution portion of this. But now you would actually have to add this revenue on top of that. That's what I'm hoping that we hear. Because if that's the case, I mean, you just dropped a nuclear bomb on the market. I wish this was on Friday, but still, what can you expect from this? Expect some scalping. Expect this to run a little bit, but they're going to go ahead and they're going to have to try and recoup. So just if you're playing options, be careful and specifically pick your marks where you need to. I just don't want to see somebody get screwed when they go ahead and do that because they've been scalping every single week. They've been letting it run, and then all of a sudden, right when it needs to be at $2 just to hit all that volume, and then boop, and then they just pull the rug right then and there. We all seen what the revenue is, all that, so we are good to go from that aspect. I will chime in here and there just to explain if there are any questions that you guys have. You know, don't be afraid to post something in the chat and just tell me what you want to know. Afterwards, I will get you guys whatever you need. And we got about 2 minutes before this baby's off and running. So, without further ado.
when you all take a look at just how well AMC kept a tight lid on our costs. With so much zeal in cost management, our adjusted EBITDA margin jumped from 13.6% in last year's 2Q to 20.1% in the quarter just completed. This all demonstrates the inherent operating leverage in our business model, which is significant at a time of rising revenues. The power of AMC's market-leading position stems from our size and scale, of course, but also from the compelling appeal of our theaters, the increasing numbers of our premium offerings, the prowess of our marketing programs, as well as our ability to keep our costs in check. Finally, after some admittedly tough years, as our industry recovered only slowly from the ravages of COVID-19 and its aftermath, the relentless focus of AMC on delighting our guests has seen AMC executing with all cylinders blazing so far throughout 2026. Combining both the first and second quarters of this year, AMC's revenues are up 16.9% year over year, and our adjusted EBITDA for the first 6 months of $359.7 million in the first half of 26 is considerably more than 2.5 times the $131.8 million reported in the first half. Think about this as you reflect on the operating leverage inherent in AMC when revenues are rising. For the first 6 months of 2026, AMC's adjusted EBITDA is some $228 million above that achieved in the same period last year. Up $228 million. As you've been learning this morning, the AMC story of 2026 includes our vastly improved operating results. But we also should speak to the enormity of the progress that we've made in strengthening the AMC balance sheet. Sean will walk you through the details in a couple of minutes. Suffice it to say, we have $1.7 billion less debt than we had at the end of 2020. Benchmark rates, interest expenses decrease as our debt levels decrease, and with rising adjusted EBITDA, interest rates also decrease as our leverage ratios improve. Thanks in part to our success in generating free cash flow, and thanks in part to our success in raising equity. Take it all together, AMC had $778 million of cash on hand, excluding restricted cash, at the end of Q2 2026. And importantly, we do not expect any significant debt maturities prior to the year 2029, 3 years from now. Looking ahead, we continue to be ever so optimistic. This weekend's powerful debut of Universal Pictures and Christopher Nolan's The Odyssey, with an encouraging media-reported $124 million domestic opening weekend gross, is the latest reminder of the strength of today's theatrical marketplace. Indeed, we also announced this morning, in addition to second quarter earnings, that there were some 4.3 million guests in AMC theaters and Odeon cinemas this weekend from Thursday to Sunday. 4.3 million people in our theaters. Big numbers.
$2.28 pre-market.
The debut of The Odyssey will be followed a mere 2 weeks from now by Sony's highly anticipated Spider-Man Brand New Day, for which advanced bookings suggest yet another box office triumph is at hand. There will be more exciting movie weekends this year, especially including when Warner Brothers will be releasing Dune Part 3 and Disney will be unveiling Avengers Doomsday just before Christmas.
We believe that movie theaters will enjoy in the full 12 months of 2026 their strongest yet post-pandemic year at both the domestic box office
and at the global box office. The summary of 2026 so far is that our strategy, our execution, and our preparation at AMC all came together as the recovering box office met a strong, lean, and well-positioned market leader in the largest movie theater chain on earth, AMC. In short, $321.4 million of adjusted EBITDA, the best in 106 years. What a quarter. What a quarter. With that, I'll turn the call over to Sean Goodman, our CFO, who will walk you through our second quarter financial results in greater detail. After that, I'll return to highlight some of the consequential strategies and actions that encourage us greatly as we move forward. Sean?
Thank you, Adam, and good morning to everyone. We are indeed proud of the Q2 results. They delivered the highest quarterly revenue and adjusted EBITDA in AMC's entire history. We did not simply benefit from a stronger industry box office, we outperformed. In the United States, admissions revenue increased by 11.4%, approximately 70 basis points ahead of the industry box office growth. That was 10.7%. And in Europe, our attendance increased by 17.9%, and that's approximately 170 basis points ahead of the relevant industry attendance growth. The success of our initiatives around the market share, per patron profit, cost management, and portfolio optimization, coupled with the benefits of operating leverage, drove its second quarter adjusted EBITDA up 70% to the record $321 million. That is more than $30 million ahead of the previous record. That was achieved almost 9 years ago when our attendance was approximately 23% higher. Comparing Q2 2026 results to the prior year, approximately $200 million of incremental revenue generated $131.9 million adjusted EBITDA. That's a roughly 66% flow through. 150 basis points to 20.1%. The second quarter's performance was broad-based across our global circuit, with food and beverage revenue per patron and total revenue per patron hitting new all-time highs in both the domestic and the international businesses. In the United States, adjusted EBITDA increased by 57.5% year-over-year to $285.6 million, while in Europe, adjusted EBITDA increased by 337% to $35.8 million. Note that when comparing our second quarter 2026 results to the prior year, international revenue and EBITDA benefited by approximately 2% from European currency appreciation versus the US dollar. And also note that 2026 general and administrative expenses benefited from an approximately $5.5 million credit associated with insurance recoveries. It's informative to compare our results this quarter to the second quarter of 2019. That was before the onset of the pandemic and before the strategic actions that we have taken over the last 6.5 years. In this year's second quarter, the North American box office was approximately 7.5% less than the second quarter of 2019. Yet in Q2 2026, AMC generated 6% more revenue and 39.5% more adjusted EBITDA than we did in Q2 2019, with attendance at our theaters approximately 26 million people, or 26.5% less than in 2019. So we generated more revenue and significantly more adjusted EBITDA in a lower box office environment after 7 years of inflationary cost pressures and with approximately 16% fewer theater locations. This very clearly illustrates that we do not need the box office to return to pre-pandemic levels to achieve the same levels of EBITDA. This is because of the actions that we have taken and that we continue to take to enhance our market share, grow profit per patron, reduce our cost base, optimize our theater portfolio, and invest in the guest experience. During the second quarter, we closed 7 theaters and introduced 6 new premium large format and 25 new XL or extra large auditoriums. Since 2020, we have now closed 225 locations. We've opened 66 for a net reduction of 159 theaters, or approximately 16% of our global circuit. We have at the same time also added 77 premium large format and 193 XL or extra large auditoriums. This increases the number of premium or enhanced auditorium options available to our guests by more than 50%. Now let's move to the balance sheet. Our priorities are clear. 1, maintain sufficient liquidity. 2, reduce borrowing costs and extend maturities. 3, lower financial leverage. And 4, invest in high return opportunities that enhance the movie-going experience at AMC. During the quarter, we successfully refinanced $400 million of debt that was due in 2027, maturity by 4 years. We also eliminated approximately $155.8 million of exchangeable debt that was due in 2030 through its conversion into equity. And we completed $150 million of at-the-market equity offering, raising more than $85 million of gross proceeds during the second quarter. In addition, we recently completed a $200 million registered direct equity offering with several institutional investors. Following the closing of that transaction, we exercised our right to redeem the remaining $125.5 million of 6.8% senior subordinated notes due in 2027. This redemption is subject to a 30-day notice period, and as such, the subordinated notes will be redeemed on July 24th, 2026. As a result of the debt refinancing and repayment actions taken in the second quarter, we do not anticipate any material debt principal payments required prior to 2029, and our go-forward annual cash interest expense will be reduced by approximately $16 million. First half of 2026 financial performance, together with a meaningful improvement in the balance sheet, has resulted in a substantial reduction in our financial leverage ratios. And thanks to the terms that we negotiated in our various debt documents,
This is huge.
the financial leverage reduction achieved during the second quarter is expected to trigger a reduction in the interest rate paid on approximately 75% of our debt. This will result in a lowering of the annual interest expenses by approximately $51 million. At the end of June, thanks to free cash flow generation of $190.1 million and the benefit of the capital raised during the quarter, our cash on hand was $778 million, excluding $42 million of restricted cash. It is important to note that on July 24th of this year, $125.5 million of cash will go out to be used for the redemption of our subordinated debt. As you may recall, our working capital cycle is closely tied to the seasonality of the box office. Generally, this has resulted in a positive cash impact from working capital in the second and fourth quarters, and a negative cash impact in the first and third quarters. And we do expect this cadence to continue through 2026. With a strengthening balance sheet, enhanced cash position, and a resurgent box office, we're continuing to execute on the highly successful AMC Go plan. And we expect net capex for 2026 to be between $200 and $235 million. Ahead, we are optimistic about the ongoing recovery of global box office and confident in our ability to convert box office growth into significant growth in profit, cash flow, and ultimately shareholder value. And with that, I will turn the call back over to Adam.
I want to briefly address a few key topics, 6 to be specific, before turning to your questions. First, one of the reasons AMC continues to outperform is the strength of the relationships that we have built with our guests through our industry-leading loyalty programs. More than 40 million U.S. households, for example, have participated in our AMC Stubs loyalty program, creating a direct and ongoing relationship between AMC and our guests. It is especially helpful that we know exactly which movie genres and which movie titles they have seen in our theaters. Through our loyalty programs, we're then able to develop a valuable understanding of our guests, reward their patronage, and encourage them to visit our theaters for the movies that they most like more often. AMC Stubs members represented just more than 50% of our total U.S. guest count in the second quarter. Benefiting from our many best practices learnings from our highly successful limitless subscription programs in Europe, I cannot rave enough about the success of our A-List subscription program in the United States. The one that lets you see up to 4 movies a week for a flat monthly fee of somewhere between $24 and $30 a month, plus tax. At the end of the second quarter, more than 1.1 million movies in this program, more than double the membership that AMC's A-List had just 5 years ago. A-List is such a popular program, especially among Gen Z moviegoers, and it gives AMC a more consistent and increasingly more predictable cadence to welcome a younger generation to flock to movie theaters, as their parents and grandparents did before them for decade after decade, dating back a full century or more. Indeed, A-listers who also get to participate in our AMC Stubs loyalty program were responsible for right around 20% of all AMC theater patronage in the U.S. during the second quarter. Think about that. 1.1 million people out of the 330 million Americans are so loyal to AMC that they represented about 20% of our movie-going customers in the second quarter, which itself was so successful. Third, Sean often mentions with great satisfaction our closing non-performing theaters and opening shiny new ones. What is so impressive here is that the theaters that we're opening so outgross and have so much more combined profitability than the theaters that we've shut. What's more, our willingness to do so also has given us the credibility we need in the theater landlord community to successfully renegotiate and receive much more attractive from many of the theaters.
That's huge.
Fourth, AMC is the movie theater chain that led the way with recliner seating, both in the U.S. and at our Lux branded theaters across Europe. Ironically, many of our highest grossing theaters simply can't take reclining seats because they require so much seat loss. We just can't afford to give up those seats in theaters that are so thoroughly patronized. Fortunately, we have a solution to this conundrum. Our relatively new branded AMC Club Rocker seat is much more attractive and much more comfortable than the seats that preceded it. The seat loss is but a fraction of the seating given up to install full recliners. And it also costs only a fraction to deploy the Club Rockers compared to what we previously were investing. The AMC Club Rocker seats propelled AMC Burbank, AMC Lincoln Square, and AMC Empire to be among the highest grossing theaters across the entire country week after week after week. Just as it has been for the past several years, we will remain highly disciplined with our capital expenditures efforts. But even so, we have figured out a way to relatively inexpensively get more of these Club Rockers into more of our top performing theaters, which will make them even that much more appealing to moviegoers. Fifth, I've noticed that many analysts have been writing recently about the power of extra large format and premium large format screens. I want to remind you how much of a commanding lead AMC enjoys, most importantly with IMAX and with Dolby Cinema, among others, along with our house brands, consumer preferred premium products all, and proudly featured in the world of AMC. Globally, AMC and Odeon now have deployed and operating some 226 IMAX screens, 182 Dolby screens, and 3 ScreenX and 40X screens, along with 193 XL screens. Just about 750 in total. No other movie theater chain on earth comes even close. And these auditoriums are so popular. They represent only about 8% of our total screen count. But for the Odyssey this weekend, for example, they generated more than 50%. IMAX especially performed fabulously well with the Odyssey. Chris Nolan's epic movie was filmed entirely with IMAX cameras, and our IMAX auditoriums are just packed right now. That's a real triumph for both IMAX and for AMC. It's no surprise then why AMC and Odeon are so committed to further increasing the number of our PLF and XLF screens. Mostly using third-party capital to get there, I think that we can affordably increase that total count of our PLFs and XLFs by 100 and 250 more 2 to 4 years.
I'm Jack.
And finally, six. I really want to salute our headquarters staff and our theater teams in the field for the creative ways in which they have controlled costs so far in 2026. It would almost be not mind-numbing on this webcast today to try to walk you through all the line items on which we've been vigilant in keeping costs in check. But you should know that our success in the second quarter in driving more EBITDA than almost any of you expected came from our determined efforts, first to get revenues growing, but to get them growing at a far faster pace than that of expense growth. With that, Sean and I would be pleased to take your questions from analysts and our retail shareholders following a quarter in which I forgot to mention it before, generated some $321.4 million for AMC.
Thank you. If you'd like to ask a question, press star 1 on your keypad. To leave the queue at any time, press star 2. Once again, that is star 1 to ask a question, and we'll pause for a moment to allow everyone a chance to join the queue.
I'm jacked. Jacked to tits.
And our first question today comes from Mike Hickey with StoneX. Your line is open. Please go ahead.
Hey, Adam, Sean, John, congrats, guys, on a incredible 2Q, strong first half performance. 2 questions, Adam. The first is probably your point 6 on your team's cost discipline here, which has been exceptional, holding your OPEX basically flat in 2Q. How sustainable do you think that cost discipline is in the second half? And would you expect continued revenue growth to drive similar operating leverage?
Thanks, Mike. And by the way, Mike, our top lawyer at Weill Gotshal is named Michael Hicks. So it's very confusing. It's very confusing. Thanks for your nice words about the quarter. It was quite a good one. There were a few one-time items in the second quarter last year and this year. So I don't know if we'll have exactly the same expense growth going forward, expense growth containment going forward as we had at Q2, but that's a small piece of what was going on in Q2. What was really going on in Q2 is just we really contained costs. And I'm so proud of our people because it took, 30,000 of them across 850 theaters, as well as in our headquarters organizations in Europe and the U.S. to pull it off. We're going to be maniacal in continuing to try to keep our costs down. Will we have the full 700 basis point improvement in adjusted EBITDA margin every quarter going forward that we had in Q2? I guess that remains to be seen based on how strong the revenues are and how much we can keep a lid on costs. But we're going to do everything in our power to maximize and drive revenue growth and keep costs under control.
Thanks, Adam. The free cash flow also exceptional, $190 million free cash flow. And, I guess at this point, and I know that you've brought your leverage down, you reduced your interest expense. That all seems very positive for the second half and overall annually. Do you have a sense at this point the level of box office that would be required for you to consistently generate positive free cash flow moving forward?
We have the movie slate.
Points would you like that answer? We know exactly what the break-even box office needs to be for us to be free cash flow positive on a 12-month basis. Right now, it's right around $10.4 billion, which is so impressive because if you compare what it was back in 2019, pre-pandemic, add 7 years of inflationary costs and wage pressure, among other things, and everything is more expensive that we buy because that's everything that everyone buys is more expensive over 7 years. You would have thought the break-even box office would have been much higher, but we've done such a great job in increasing our profit per patron and controlling our costs. We're within sight of being cash flow positive, not for a quarter, but for a year. And the efforts to continue to drive that break-even box office level downwards continue. If in fact we are successful in continuing to get lower interest rates going forward, and Sean deserves to be justifiably proud of how we built some automatic triggers into our various debt instruments, that as our leverage ratios improve, our interest rates fall, and that's exactly what's happening right now with the strong operating results from the second quarter and having paid off or converted into equity a bunch of our debt so far this year. If interest expense goes down, that means that the break-even box office level goes down as well. As I said to your earlier question, Mike, we're going to continue to do all in our power to drive revenues. Remember that something like 2/3 of our incremental revenue dollar falls to the EBITDA line. And we're going to do everything in our power to keep costs under control. We're not quite at break-even neutral for the full year, but boy, are we close. And there's so much improvement over we've been since 2019.
You're kicking ass and taking names.
Thanks, guys. Congratulations.
Thank you. And our next question will come from Alicia Reese with Wedbush. Your line is now open.
Thanks. Great numbers, guys. Congrats on the quarter. I have a couple questions about international. Just looking at the admissions revenue per screen growth of 20% year over year, and that's on a 34% growth last year in the second quarter. And some really nice growth in the first quarter, strong expectations for the back half of the year with a good slate. I wonder if you could talk about, you had mentioned about 250 more premium large format screens expected for the full, I think, global print over the next 2 to 4 years. To what extent have you completed your upgrades in Europe, and are those driving results? And to what extent are you still taking that 250 and driving that higher?
Alicia, I'm going to let Sean answer your question because our international theaters actually report to Sean in addition to his CFO duties. But I just want to clarify one thing. What I said on my prepared remarks is that we'll do somewhere between 150 and 250 more premium format and extra large format screens, the so-called XL at AMC screens in the US and XL screens in Europe. We have 193 of them now. I'm sure that we can add 100 more, maybe more than that, across the US and Europe going forward. So there's a lot of opportunity to add more screens. And we do get a healthy price premium for our premium products. Here in the US, for example, our IMAX auditoriums, our Dolby Cinema auditoriums, usually are carrying something like a $6 or $7 price premium over a traditional auditorium. Our Prime auditoriums and our iSense auditoriums are also commanding healthy premiums, and even our XL screens are commanding smaller price premiums, but price premiums nonetheless, basically up maybe 10% above normal auditorium pricing. And not only do we get higher prices for these premium products, but they're also the auditoriums that book first. And you just need to look at this one weekend on Odyssey that our premium and extra large format screens were 8% of our screens, but 50% of our gross. I mean, you know, the premium format screens and extra large format screens have the generating power of, 6 times that of a normal auditorium. So you can be sure that we're going to do all in our power to increase the number of IMAX auditoriums in our system, Dolby Cinema auditoriums in our system, ScreenX and 4DX auditoriums in our system, and our house brand Prime and iSense auditoriums and our XL screens. With that, do you want to make a further comment, Sean, about Europe?
Thanks, Adam, and thanks, Alicia, for the question. We are very fortunate because, in line with what Adam is saying, we have a very long list of extremely high return projects, longer list than we could afford to actually invest one particular point in time. We're also fortunate that we're able to get co-funding from our technology partners, from our landlords, to do investments in our theaters. The opportunity in Europe is pretty much the same as it is in the US. The recliner penetration in Europe is actually quite significant lower than in the US, so there's an increased opportunity with recliner penetration. The Lux theater conversions that we've done in Europe have generated extremely high returns. And so those opportunities exist, and we're spending at the moment pretty much a proportionate amount of capital in the US and Europe, and on these very, very high return projects.
And I might add, for as excited as we are about the current profitability in the second quarter of AMC, there's so much operating leverage in our company that when revenues rise, EBITDA rises at a much more rapid clip. And as Sean said, there are a lot of growth opportunities that we look at, but I don't want anyone to have the wrong takeaway from this conversation. If you look at the last 6 years, AMC has been incredibly disciplined in our capital expenditure efforts. We've skinny down CapEx and embraced only the most obvious successful products and projects. We intend to continue to be extraordinarily disciplined in our capital expenditure process as we go forward.
And as a quick follow-up, can you just discuss briefly the ROI on the European recliner upgrades, and just compare that to US back when you were doing that, and the premium and large format screens as well? Is the ROI similar to US?
Yes is the simple answer, and they vary project by project, but it's not uncommon for us to see ROIs achieved of 30% or more, 40% or more, 50% or more. On the XL screens, they were so inexpensive to create because the screens already existed. We just didn't necessarily market that we had them. The IRR of the XL screens is pretty much infinite. Our total cost to put an XL screen in place, XL screen, for which we're getting a 10% price premium in perpetuity, at least if current pricing were to continue. I don't want to make any forward-looking statements about pricing. But our expenditures for a XL screen were under $20,000 a screen. I mean, that is, the returns are really high when you can create a product of close to 200 screens globally and spend very little money doing it.
And I'll add to that as well, as one would expect, the returns are also really high when you can get co-funding from your landlords or your technology providers as well. And given what I said at the beginning about a long list of very high return projects, because of that and because of our disciplined approach to capital spending, we're investing in the highest return of those projects. So we're really investing in very high return projects that are going to be beneficial to our revenue and profit growth going forward.
Excellent. Thank you, gentlemen. Appreciate your responses, and congrats again.
Thank you, Lisa.
Thank you. And our next question comes from Chad Byman with Macquarie. Your line is now open.
Hey, good morning, Adam and Sean. Nice quarter. Thanks for taking my question. Wanted to ask just about the per patron spending metrics. Obviously, this industry has always been affordable compared to other out-of-home options, particularly what we're seeing with World Cup pricing, concerts this summer and a number of other subsectors. But how are you thinking about pricing opportunities? I know you've already talked a lot about, premium format and kind of what that does to pricing. But are there still opportunities either on admissions or concessions in the back half of the year or 27 to keep raising pricing? Thank you.
So, Chad, I was schooled as a young marketer that it's patently illegal for me to talk about pricing strategies on a going forward basis. So I'm not trying to duck your question, but I can't answer your question. But I can answer your question in a different way. What I'm very proud of, looking backwards, not looking forwards, is AMC has done a really successful job of raising price where we should when demand is strong and reducing price where we should so that bargain hunters can find appealing ways to get into our buildings and buy stuff from us profitably. And just some examples. Last July, for the last more than a decade, the movie theater industry has had cheap pricing on Tuesday. Last July, AMC took that cheap pricing on Tuesdays and instead added another second discount day by introducing cheap prices on Wednesdays. 50% off Wednesdays, 50% off Tuesdays. It was brilliant, if I do say so myself, because prior to that effort, we didn't have anybody in our movie theaters on Wednesdays to speak of. And now Wednesdays is a strong day for us. So there's an example where reducing price worked. Another example of reducing price, A-list. Now 20% of our patronage. Our A-list members have the right to go to four movies a week. That's 17 movies a month. They don't go to 17 movies a month. They go to two and three movies a month. But they have the right to. They can do. Some do. Like many occasionally do a lot more than two or three in a particular month. But this has given us a great opportunity to drive moviegoing to secondary movies that might not have made the blockbuster cut, and also allow us to sell more food. So there are examples where we have reduced price. But, as you say, we have certainly not been shy at AMC in raising price for our premium offerings on weekends For our blockbuster titles, I could give you example after example after example where we have proven to ourselves and to the outside world that there, again, looking backwards, not looking forwards, that there has been price opportunity and that AMC has smartly been able to take it. And if you compare the average ticket price that AMC achieves, and you compare that to all the other large mass operators, you're going to continue to find, I believe, that AMC is more successful in commanding higher ticket pricing than our competition. That is a testimony to our proven ability to smartly price, both in having raised prices where we should and having reduced prices where we should.
And if I could add just one thing, is that we shouldn't completely equate revenue per patron increases to price increases, right? Because in the case, for example, our average ticket price, significant portion of that increase is driven by the mix. More guests choosing to go to premium formats and willing to pay for that price. In the case of food and beverage per patron, is driven by us introducing of the movie-themed popcorn containers, which have been incredibly successful. Now, if you look even at the case of our other revenue, it's driven by adding new revenue streams such as retail popcorn, etc. So we can grow our revenue per patron without necessarily increasing price. It's providing new opportunities for audiences to go to premium formats, providing new movie-themed content, movie-themed merchandise, etc., to excite the movie-going experience, etc. That drives the revenue per patron up as well.
And we are cognizant that the market's opening in 7 minutes, so we're going to make sure we try to be quick. But I'm just so proud of this. I keep bursting at the seams. 4 years ago, our movie-themed merchandise business had revenues of zero because we weren't in the business. This year, 2026, full year, when you add up our U.S. movie-themed merchandise and our European movie-themed merchandise, we should exceed $100 million. That's out of thin air. Good for us.
Thank you both. I'll leave it there. Appreciate it.
Thank you.
Thank you. And our next question comes from Patrick Scholl with Barrington Research. Your line is now open.
Hi. Good morning. Thanks for taking the question, and congrats on the record results. Just following up on Mike's question on maybe like the level of box office. Is there like a level of box office or leverage level, and you've made great progress on that over the past few years, but like a leverage level where you'd be more comfortable with the balance sheet?
It's not the leverage level that we've had over the past 6 years, and that's why we've been reducing our debt every year since then. As you can see from our 2026 June results, the leverage level has improved considerably. But I want to be quite clear, that is not the leverage level that our goal is to get to as well. We know that there's further to go, and we will get there by continuing to reduce the principal balance of the debt and also by increasing EBITDA. Ultimately, and it's going to take a little while to get there, we'd like to get to around a 3 times leverage level. We recognize that's not where we are now, but look at the significant change in the leverage level that has happened over just the last 6 months. You know, we went from a double-digit leverage level to now what looks like a leverage level that is less than 6.5 times. So a very significant improvement, and we'll continue to work towards continuing to make those significant improvements.
Okay, thank you. And then on your updated expectations on CapEx, is that an expectation that you would have going forward, or is that kind of timing and just increasing some of the projects ahead of, like, you know, the Q4 slate, or is that also what you alluded to earlier with increased lease incentives from the landlords? There's a little bit more kind of color around that. Thank you.
I wouldn't read anything into future years with that because, as Adam said earlier, we're incredibly disciplined on our capex spend, and it will be very box office dependent. We, as we said earlier on this call, have just such incredible opportunities to spend money this year and create significant ROI that will benefit the results, that we've taken advantage of the opportunity to do that. We're doing that this year, and we'll have to look at 2027 capex, look at the individual projects, look at our expectations for the box office, etc., and at that point decide what our capex spend, what appropriate level will be for 27 and going forward.
Great answer on a trip question.
Thank you so much.
Thank you.
Thank you. At this time, there are no further questions. Thank you. I will now turn the meeting back to Sean Goodman.
Thank you very much. Adam, I think there's time for just one quick question from our retail investors. So the question relates to equity and capital markets, and the question notes that we have done 2 equity raises during the second quarter, and just a question to discuss the rationale for these equity raises and why they are important to AMC and our business.
Thank you, Sean. We've raised a lot of equity over the past 6 years, and that's why when other movie theater chains went into bankruptcy or liquidation, AMC did not. But even we know that the issuance of stock is a precious commodity. We don't issue it lightly. We think very hard about how much equity we should offer and when. There's always a good reason for it. In the case of the equity that we raised in the second quarter this year, we had a debt maturity coming up less than a year from now where we needed to repay $125.5 million of debt. And the alternative to not repaying that debt would have been catastrophic. So we made sure that we raised the cash we needed to prosper. Having said that, we also know, I've said many times publicly, that cash is king. We also know that the thing that separated the companies that survived COVID and the Hollywood strikes is that they had cash in the bank. And the companies that did not have cash in the bank faltered. And in our industry, there were many companies that faltered. And so we've also been quite insistent that we always have, to the extent possible, robust cash reserves so that we have the time to recover. And look what's just happened with the second quarter. Because we gave ourselves the time to recover between the end of 2020 and the beginning of 2026, we put ourselves in the position through a better film slate and a more successful company that was driving revenues and cutting costs. We put ourselves in a position to report a record quarter of $321 million of EBITDA and $190 million of free cash flow. So while the decisions we made were not always popular with our shareholder base, we knew that they were absolutely essential for our survival and gave us the runway we needed to get to the promised land. We're not quite at the promised land yet, because while we were free cash flow positive in Q2, we got a little way to go to be free cash flow positive for a full 12-month year, but we're ever so close. And as I said, we ended the second quarter with $778 million of cash on hand. Tough decisions, but they were made with great care and deliberation. With that, I think the market's opening, so we're going to finish off this call. I want to thank all of you for participating today, both our analyst community and our retail shareholders who joined the webcast. And I leave you with three simple thoughts, which are not going to be a surprise to any of you. Number one, holy moly, what a quarter we just completed. The best in 106 years with $321.4 million of EBITDA. Number two, if you were one of the 4.3 million people in our theaters this weekend who reveled at The Odyssey, it's got a 95% score from critics on Rotten Tomatoes and a 97% score from audiences on Rotten Tomatoes. I would strongly encourage you, buy a movie theater ticket, go out and see The Odyssey on a giant screen. It's how that movie was meant to be seen, and you're in for 2 hours and 50 minutes of extraordinary entertainment. And three, while I think The Odyssey is going to have legs for many, many weeks, just 2 weeks from now, Spider-Man Brand New Day will open in our theaters as well. And our theory, based on the advanced bookings that we've seen, is with all these good movies that have come out this year, especially in the second quarter, 6 movies opening to $75 million or more, Toy Story 5 coming out to $140 million opening, Odyssey coming out to $124 million opening. We think that Spider-Man is going to be the biggest movie of the year so far. So, there's going to be a lot of movies for you to choose from this week, this month, and throughout the remainder of calendar year 26. Thank you one and all for joining us today.
Yeah, boy. What a call. And we got Matt. Matt woke up.
Yeah, it was kind of what I expected. I was a little, I don't understand how we're not net positive on bottom line.
No, I don't understand that. That was one of my questions that I was curious about. The other thing I was also curious about was how NVIDIA was up during that entire call. I was
said they recover all theirs to match ours.
No, not all of it.
What was
like
it? 6% over Tuesday, 2 days, Thursday, Friday.
Close to 10% roughly. And they picked up 2. So they're still down 8%, but still, it all depends on where we go price point wise at close of day today. Because right now they're up 2.12.
Well, the volume's through the roof.
Yeah, volume's through the roof. We're still climbing. We need to be, if we can close at like 235 to 238 with continuing momentum going forward. Oh, baby. You got some juice. Now, I mean juice. That's the most important.
They're really trying to fight it.
Oh yeah, they're trying to fight. Not even a question. It's go time. But that's the fun part. Like, I mean, that's what gets me going, especially when it comes to anything in the market. That's when you're just like, oh yeah, let's go juice. Juice. So what the hell is going on with the mic? Well, that was a good question. So during live calls, that's why I was trying to do a space, because this way I can actually control the audio live to where it's a live stream, and I'm having a control of that. That's a problem. So yeah, I'll fix that. But yeah, for some reason, I guess X suspended my account or flagged me or something. But
we're doing the earnings call.
Yeah. No one could actually get into my space until I opened a live. I wasn't going to let fucking X win this one. Not even a question. I was going, go for broke today. Let me tell you, I was pissed. So I'm happy with the way things went. I'm happy with their CapEx. I am happy with their balance sheet, how disciplined they actually were, what they have done to their theaters.
The revenue from operational cash.
Huge.
Yeah, I mean, like he said, we're almost leveled out on the year already.
Oh, the other thing that I really like too, and this is something that everybody should have been wondering about, was the actual, okay, how many theaters closed to how many theaters opened? What was the cost of that? Just to get those new theaters up and going. But, I mean, they were way more profitable, which is huge.
Yeah.
Huge. The other thing...
What do you say, 20,000 per screen for the just for the large format?
Oh, my God. And what they were picking up on the back end, too? For all those screens? I mean, whoever negotiated that deal did it right. Let's just say that. But what I was also impressed with was the way that they answered questions, is specifically Sean Goodman on that call. And that was just, he walked into 3 trap questions with trying to explain like the future balance sheet and what was going
right. They want him to give forward outlook, and he's like, we're disciplined ethically, and we're not going to do that.
Well, yeah, exactly. I mean, it's not like that's something you can predict anyway. I mean, that is a.
He basically put him. He said, just look at what we're doing with the box office, and I'd suggest watching the box office, see what the box office is doing, because that's a direct reflection of what we're doing at the time.
Correct. But it was such a loaded question where you're sitting there and you're like, what is he going to do? Like, I was waiting for a fuck up at some point, and then no, he flew right, and it was just gold. And Adam Aaron was controlled. I thought, like, I mean, you heard his excitement and everything, but I'm saying he wasn't defensive. He was polished. He sounded great. He answered all the questions, and he didn't shy away from even the difficult ones, where he said, listen, I'm not allowed to answer your question, but I'll answer it in this way.
The other thing is, nothing changed year to date so far on 100 million projection for merch.
Oh yeah. So
we're on track with what their goal plan was for merch at the current.
So based upon that, the only thing that is the bottom line net number.
And I just think that they're literally putting everything they can into the CapEx.
Well, they have
premium expansion.
Well, they have to. Because that's the bonus. That's you getting the points.
So basically, instead of bottom line netting, gaining on PE, we're gaining on operational leverage, so that for future PE,
absolutely,
on the margin value, which I get, but I just want 1/4 of bottom line total balance sheet net.
Can I be honest? I mean, we did an earnings 20 days after a quarter end, which AMC's average is like 42 days over the last 6 years. I'm impressed that they got that much in, not showing their hand, and at the same time leaving this as a total shell shock to the entire market, basically giving a big old to everybody. It was awesome. That was my favorite part. You doubted us? Well, fuck you. like, that's exactly what I got out of it. And it was great. And especially hearing Adam Aaron, like, with his, I mean, the follow through, the way that he was poised and when he answered, and he made every critic look, I mean, basically bow to his will that asked the question. It was great.
They were definitely trying to chase anything that they could use as a leverage narrative.
I mean, they had to, though. I mean, that guy from Barrington Research. Oh my God! First of all, what a jamoke. But second of all, I mean, well, can I get us some like forward running statements here about the about the CapEx, and then can I also ask this question because I just want to know. No. Here's the answer. Like, I mean, he tried. And I love the loaded trap question, too. Like, I mean, you just knew it was coming. And even the girl with the follow-up on top of that.
That was Reese from Weedbush, right?
Yeah. And then the woman who, I mean, just completely just, all you need is a gentle push. Like, let me try and be gentle and sweet, and maybe I get something out of it. Nope.
She's not usually a negative sentiment writer when it comes to AMC. Her articles herself.
No, I agree with that.
They're fair.
They're fair.
And her question about, the differences between Odeon premium format in U.S. was an interesting
232, baby. Yeah.
Insight.
Come on, baby. Just get to that, like, give me a 240. Give me a 40.
Let's pushing another.
Yeah,
we are.
Get to 250 and watch the juice start getting loose, baby cakes. Oh, baby. Because then
I had a light resistance line at like 228, and it was kind of bouncing around right up against that breakthrough. My next price I'm looking at is in that 286 to 290.
Yeah, give me past 250. I just want 250. 250. Because after that, watch how much margin that they gotta fucking come up with.
Right.
I mean, that. Good luck. I think the what was the number? I think I took
210.
No.
210 was the number that the last debt restructure.
Oh no, I was talking about like the actual. I was actually talking about like the actual money involved, like how much they would actually have to fork over. All
I know, every short that was established from November of last year to now,
shitting their pants,
getting their ass kicked.
I mean, they are there. If you want to see streaks, I mean, they are just running down those pants.
Oh, wait till the mark to mid market comes in this afternoon.
Oh, they're just gonna get slammed. And I'm going to laugh.
Because that's... What do they do it? They do it at midday and market close, right?
Mm-hmm.
Margin evaluations.
Oh, yeah.
But they do the midday for the volatility on the open cycle for the spread risk, right?
Yeah, they have to. I mean, but
and then it goes mark to market close on the actual settled price exposure risk.
We have to. What is Cinemark looking like? Are they just flat?
Let me look.
There's a reason why I'm asking, because it's
because you want to see if it's an industry, but I'm sure it is. But at the same time, they ain't fucking bouncing like we are, which would basically, I would think not.
No.
So I would say, yeah, they're bouncing pretty good. They're up 3.39.
They need to stay roughly flat.
I wouldn't say flat, but at the same time, this is company specific when you're bouncing higher than the sector norm.
Yeah, but
and the sector average. Quite a bit higher, might add.
I mean,
but they were also bouncing off their most recent bottom too already. So, because they had a high of 34.73 and they bottomed at 28.50, and their current is 31.20 open with a 31.47 price tag. So they've made $1.40, 14 divided by 3, just done 3.26%.
So
close to close.
What I need,
open to close.
So what we need to prove my theory or what I'm thinking, and this is also holds true for Microsoft, Meta, Amazon, Google as well. It could be any one of the mega cap stocks in the S&P 500, but AMC plus on the day has to be above 15%, which we're blown way past that. Cinemark approximately flat. GME plus 5% roughly. Where's GME at? GME is down. They're about flat. Nvidia minus 3%, while the semiconductor index is flat or only slightly negative. Microsoft, Meta, Amazon, Google, and other liquid mega caps begin selling after AMC continues or follow a continuing semiconductor sell-off. The price evident would not support the collateral theory. If that's conversely, if AMC rises on good earnings, GME stays flat, Nvidia merely follows a continuing semiconductor sell-off. So yeah, Nvidia's got to flip, but that could happen in the afternoon, especially after the margins presented. It'll be interesting. Do you know what time that? It's right before close. I know that.
What's that?
For the margin. That it has to get equated in this afternoon.
The volatility, I think, midday valuation is at that.
It's like 12
o'clock or the 11:30 or whatever.
Okay.
Before 11:30, and then it's the closing price post market, which is why you get a lot of times you get the. Because didn't they not used to have the midday volatility measure?
No, they never did.
So that's why you used to have like the after hours runs because of the closing price margin value, and then the volume for the day equated into the price spread risk for the entire day.
Today will be an interesting day. We're going to go with that. I like interesting. I mean, this is a hell of a lot more exciting than up 22.34%. I'll take it. All day, day. I mean, that is just, talking about tits. Let's just go. Wow. I don't know why it keeps on, my terminal keeps on, jumping in price. All of a sudden I'm at almost 240, and then it dropped to 220, just like that, on a dime. It's crazy. It's a fun day. 217. Wow, they're hammering. Did the volume cool? No.
No. Oh, hell, we're going to be well over 100 million at this rate.
Oh, yeah.
Let me see something. They're flipping about 12 million shares on the net balance.
I mean, that's ridiculous.
OBV just today had 29 million OBV bounce from start to high, and now it's coming back down.
I mean, you're down 10%.
It doesn't matter as long as I think it's going to track that 50-day moving average on the. What am I looking at? I'm on the 5 minute. Let me look at the hour. Yeah. On the 4 hour, they literally brought it right down to the 200-day and bounced off it again. Or trying to bounce off it.
I mean,
the 200 days currently at 207.
I mean, they have to try and hammer this thing, though.
The low on the candle was 210.
They have to hammer this thing. They have to try to. If it goes anywhere near...
They ain't crazy enough, though. I don't think they're crazy enough to drop it below the 200 day again.
Oh, they can't.
This is I think it's gonna gain support 200 day. I'm on the 4 hour. I'm not on the daily.
Yeah, but the collateral call alone.
The daily, I mean, we're well above the 200 day. Matter of fact, the 50 just crossed over.
I mean, the collateral call will, absolutely destroy them. I mean, literally destroy them.
That damn 160 candle last week, fucking, it pushed the 100-day down.
Mm-hmm.
At the bottom of that candle and created a spread gap for the gold cross. The spread gap on the gold cross right now is 23 cents.
We're right there. I mean, we're right there.
Right. But I have a feeling they're going to drag it out because what's going to happen is that 200 days starting to turn into an upward trajectory.
Well, I mean, it has to.
Right. It was pretty much on the flat line now, which is fine. Like the 200-day on an uptrend is bullish longer term. But it's also going to slow down the crossover for the golden cross when the 100-day has to catch up to it.
Well, I mean, that's still like you and I discuss every time. The market has to balance itself out, regardless.
Right.
Because they're gonna. I mean, don't be shocked if they're gonna start scalping towards later on this week. Don't be shocked.
So I think our opportunity to buy sub $2 over. Never did.
If you get around 240. If you're at 240 by end of week, oh yeah.
No.
I think so. I think you're done. Yeah, then you're done.
Yeah.
I mean, they have to try and pick up whatever they can, margin-wise.
I don't want to say it, but I'm going to.
Say it.
Right now, option premiums are blowing up. And that's all fine and dandy, but remember, that's a big source of money when that volume comes back down.
Oh, that's on
premium price.
That's the trap.
Right.
I mean, that is the 110% trap that you're walking into. That's the problem.
That's why I got out of everything else, and I'm just going to sit on shares while it cools down and put some money in the account and wait.
No, yeah, you just wait, because it's going to. They have to try and scalp. I mean, they really do.
I had a fun run for the last 2-3 months, that one.
Oh, you had a great run.
Leveraging my fucking deposits.
Oh, no, you had a great run. I mean, definitely fun times is what you had. So,
people that hung through Friday and the weekend for today's earnings call, congrats.
Oh, yeah.
Well played. I don't like that kind of risk. Not knowing what options can do to you. And I'd just rather hold the shares through the call and take whatever comes with it. So I converted all my deposits that I had put in the options, I converted into shares.
I mean,
on Friday, I'm just not going to play that whatever the fuck market wants to do on an earnings day. Too volatile for my taste.
I mean, I think everything is fine and dandy, like sour candy.
And that's like where my strategy there is different too, is that I'm not using options to make money. I'm using options to leverage and own more shares for cheaper. There's a lot of ways to play options. There's a lot of strategies that work. There's a lot of mistakes that can be made. So you know what's interesting is all the social media stuff about Odyssey and how much he basically pumped it up with the critic ratings and Rotten Tomatoes and the viewer ratings.
Mm-hmm.
He also gave a shout out to IMAX itself, the company.
I mean, that was huge.
Matter of fact, what are they doing?
Yeah, boy. For everybody out there, meet me at Keystone Angle. We'll be on Apple Music, Spotify, Google, and everything else. So
IMAX is only up 1%, but they did have a $1.65 spread.
Okay.
On their daily candles so far today. Up. Their high was 41.05. They're currently at 39.68, and their low was 39.40. The open was 40.30, but the previous close was 39.25. So we're up 44 cents.
I mean, that's still a great. That's a hell of a day.
Yeah, their ticker swings a lot too. They had their crossover and are steady trending. When you consider that they had them all the way down to in 2824, they had them all the way down to $13.20.
Mm-hmm.
And they're up to pushing 40. High of 45.52. Just a week or 6/18 a month ago. They just keep bouncing off that 200 day.
Yeah, I mean, they're literally just bouncing off of that.
That's what our chart's going to be doing, I think, here forward.
Yeah, I mean, we're at 215 right now. Bouncing.
Like I said, I ain't going to drop it below that.
No,
200.
They can't. Can't. Too much money would have to be paid out. There's no way that they can.
I was hoping there'd be enough. They'd let enough push at least to see them do that gap fill, but fuckers.
Oh well. I mean,
we have that gap fill from like 222 to.
It's still going. We're going to
290.
We're still going to go back up, so it doesn't.
Not 277.
Yeah, we're still going to get.
Oh yeah, I'm not worried about this.
No, this is gonna get back up. It just depends. I would look for their scalp probably anywhere Wednesday, Thursday, somewhere around there is what I would guess. Just for you option traders, just to be careful, watch for that. Besides that, it was a great earnings.
And they got to control the volatility price spread too because of that premium rocket.
Oh yeah,
margin value.
Oh no, they definitely do. It's it is what it is. But I'm gonna go and I have to talk to fucking Twitter because I need to find out what the fuck is going on because I'm also not seeing like the live posted like up on top.
Well, I was in it.
Oh, I know, but like I don't see it. Like with all the rest of the spaces that are out there, like I don't see any of them. Like I don't see mine at all. And I don't see any of like the actual space calls. Like all
the one had one.
No, but
yours is up there on mine.
No, I'm saying
my
I can't see it. Like I'm not seeing it. And then like everybody else sees it, but yet no one can access it. Like it just says it's unavailable. And I don't understand why. I've got no warning. I've got no nothing and I don't even know what I did. What? I was honest? I mean, what did I do? So I got to find out what the hell's going on with that. And then besides that, yeah, kind of got to get ourselves kind of situated for the real fucking show. So, but I'm as happy to do earnings. Always happy to see you guys and talk to you and report something that's actually good that happened. But like I said, just watch out for the Wednesday, Thursday scalp if they do try to scalp anything. But yeah, Matt, if you have anything else, I'm gonna close this thing down just so I can get.
No, just don't let the market frustrate you. This is what they're going to do because we know that they have that network to do it. So, but I just don't see them putting us back into an exposure accumulation setup again.
Oh, I know. Yeah, no, they're definitely not going to do that. Not right now. Too strong of figures to actually justify it.
When you're looking at what their losses on the year are at current pricing and exposure, because I mean, people were think, oh well, you know, the reported shorts or whatever, which we know is fucking bullshit, self-reporting anyhow.
Yeah,
but went down, or ratio reporting, as I like to say it is. Went down from what 120 million.
Horseshit.
To 50, but you have to remember, just like you're going off the quote unquote reported, self-reported high.
Yeah, you were
right, and that was what? That was before the December, or after the December, January.
Yes.
Share allowance.
Correct. So
total share allowance.
It's
if you only need to go back like 3 months before that, and the self-reported was in this 50, 60, or sub 50 even range.
Correct.
This time last year, so like that means nothing.
It means absolute 0.0. So, don't worry. We'll see you again or later. And
I'm feeling we'll be back up into the fucking 100 millions again soon.
No, we're going to be. You just wait until when Spider-Man gets going. Oh, that's gonna.
Well, you consider, you know, the dilution too helped bring that down, but that wasn't when you're rehypothecating that issuance against the stock.
That doesn't help.
And that exposure is not reported yet.
Yeah, exactly.
So why, in like the next 2 months, when you find out what the fuck they did with that Q2 shares that they got a hold of, so they'll be right back up into that 100 plus again.
They damn will. Everybody, have a wonderful day. Enjoy yourselves. Enjoy the market. It's going to start getting fun. And we'll see you guys later on this week. But Matt, thank you for joining. And yeah, we'll see you guys later. All right.
Have a good day. Enjoy the wins.
Damn. Funny how somebody goes from your whole damn world to a stranger who still has a key. Yeah, I remember everything.
You walking down the avenue, roll the window down, girl, where the hell you headed to? You climbed this side, smelling good, smiling like you knew that one little route would change what both of us would do. I was single, you were lonely, but pretending we weren't scarred. Too fucked up, ours they finally dropped their guard. We talking till sunrise about everything we knew. Baby, you hang up, no you hang up. Fuck that, just come through. Then your bosses fill my hallway, they went on a lease. I carried all the pressure so that you could sleep in peace. Pay the lights, pay the bills, gave you everything I had. You forever got real quiet when the shit between us got bad. I gave you keys, I gave you trust, gave you love when love got rough. Now you walking out like none of this was real. What the fuck? How the fuck you switch like that? Trip. One night in my arms, next morning bags packed quick. How the fuck you leave that cold? After everything I did to build this fucking home. Don't act like we never shook these walls. Broke the bed, cracked the frame, knocked pictures off. That reckless sweaty, tear it up, ghetto love. Now you're acting like I never was enough. You can lie to your friends, but you know the facts. How the fuck you switch like that? Trick. How the fuck you switch like that? Never thought that loving you would hurt this fucking hard. I did everything a grown man does to play his part. You should've told me all your second thoughts instead. Before I put the money on the house you said you wanted. Before I sign my name beneath another 30 years. Before I fill those empty rooms with furniture and dreams. Now I'm staring at the ceiling thinking we were a mistake. Then your body crosses my mind, I miss the love we made. We had problems, but a couple fucking dozen. Felt like we were finished, made love like we still wanted it. Thought the storm would pass and leave us stronger than before. Didn't know you had one foot already out the fucking door. I gave you time, I
I gave you space. Never threw your past back in your face.
Now you're treating me like some bill you already paid. That's fucked up. How the fuck you switch like that? Trick.
One night in my arms, next morning bags packed quick.
How the fuck you leave that cold?
After everything I did to build this fucking home. Don't act like we never shook these walls.
Broke the bed, cracked the frame, knocked pictures off.
That record sweaty, tear it up, ghetto love. Now you're acting like I never was enough.
You can lie to your friends,
but you know the facts.
how the fuck you switch like that? Trick. How the fuck you switch like that?
I was the number that you called at too. The one who dropped everything and came for you. Held you down when your whole world cracked. Never made you feel like shit for that. Someday that new shit won't feel so new. You compare every man to what I gave you. You remember who stayed when staying wasn't fun, and realize you threw away a real fucking one.
I'm just the woman I believed you were. Not this cold ass stranger standing at my door. Take your shit, take your lies, take your pride, but don't rewrite what we had inside. How the fuck you switch like that? Trick.
After all that love, how you quit that quick?
How the fuck you turn so cold
And leave me standing in this
empty hole?
Don't act like we never shook these walls. Screaming my name
Why your clothes
came on.
that nasty, beautiful, tear it up, ghetto look. We both know I gave more than enough.
Run from the truth, but you can't outrun fast.
How the fuck you switch like that? Trick. Tell me how the fuck you switch like that? Switch, switch.
What the fuck? Keep the king. The lock's already changed. When you finally understand what you walked away from, don't bring your ass back.
Yeah. Hey, Cage. This ain't a party track. This that look in the mirror shit. Turn me up. When I step up in the dark, bitches wanna look like these motherfuckers got Joker ape shit. Like I'ma stand here as a man and let a bitch ass funny looking fucker get the upper hand. Nah, I got scars, I got rich, I got shit I don't suck. I got pain in my chest that I carry alone. You can run your mouth, I don't care what you say, but get too close, I'ma clap back in your face. I've been lost, I've been stuck in my head. I done slept with the ghost of the words never said. I smile through pain while my heart bled red. Then woke up cold like the old me dead. Got issues, got no time. Got demons doing push-ups in the back of my mind. Got trust wounds deep, got a short ass few. Got a whole lot of reasons I don't fuck with you. Everybody wanna talk like they know my life, like they felt my nights, like they paid my price, like they held that weight when my soul got tight, like they stood in the rain when I begged for light. Nah, you don't know what this shit cost me. You don't know what the dark taught me. You don't know how many times I broke to stitch myself up while the world walked past me. No way out.
Chain still ring.
Pain don't die.
It learns to sing.
When I step up in the dark, bitches wanna look like these motherfuckers got Joker ape shit. Like I'ma stand here as a man and let a bitch ass funny looking fucker get the upper hand. Nah, I got scars, I got rich, I got shit I don't show. Got pain in my chest that I carry alone. You can run your mouth, I don't care what you say,
but get too close, I'ma clap back in your face.
Bitches know what I'm about out here. I don't toot my own horn, I don't have to. I've been built by pressure, baptized by fear. Now the cage door broke when I passed through. It's too real out here to be scared. A real motherfucker do what he has to. A man with pain is the last thing to test, cause he already lost what you think he attached. I don't need no crowd, I don't need no love. I don't need fake hugs from a snake ass judge. I don't need your smile, I don't need your bug. I don't need your hand when the hand got blood. I keep God in my chest, still fight with my flaws. Still curse at the sky, still pray through the scars. Still got rage in my voice, still pain in my bar. Still swing at the dark when it reaches too far. Fuck all that soft shit, I came from the mud. Fuck all that fake shit, I know what it was. Fuck what they said when I needed some help. Now they all wanna stand where the fire got hot.
Look, I ain't saying I'm healed. I'm saying I learned how to move while broken. I'm saying pain stopped being a prison and started being a weapon I control.
Ape Cage. Ape Cage. We all die one day, so I live how I bleed. Got a war in my chest and a mouth full of grief. Got a name they remember when I walk through the steam. Joker ape in the dark with a cage off the leash. I don't fear no man, I fear wasting my breath. I fear leaving my truth locked inside my chest. I fear dying quiet with my pain unaddressed, so I scream this shit loud till there ain't nothing left. I've been crossed, I've been cut, I've been thrown in the dirt. I've been taught real love by the shape of hurt. I've been told calm down when the fire got worse. Now burn through the beat like a blackout hurt. Dark night outside, black paint in the rain. White calipers flash like scars through the pain. Joker ape in the glass, face full of rage. Same
motherfuckers remember my name. This ain't survival. This is control.
Welcome to the cage. Round and round we go.
Hope you're not afraid of heights.
This ride never stops!
Enjoy the fall.
Well, that escalated fast. You haven't seen chaos yet.
Aww, don't leave yet. We're just getting started.
That's a wrap. Or is it?
Good